I felt compelled to speak about Luna, particularly the USD collapse. What went wrong? How I personally suffered massive losses, as well as suspicions that this is some type of deliberate market manipulation. This catastrophe has devastated the lives of many people and has likely harmed the entire cryptocurrency ecosystem. In a moment, you'll see what I mean. Welcome to Cryptique, a channel that gives critical evaluation or analysis, especially in dealing with crypto. Everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. So, first and foremost, let me offer you the essentials. It's a stable coin, hence USD. The currency is expected to be tied to the US dollar. This is accomplished through arbitrage trading in which investors trade USD for Luna or conversely in order to keep the price at $1. Now, this usually works. It's made a few mistakes in the past, but really nothing it couldn't overcome. Every time there has been a blunder, it has been due to the market tanking or something similar. However, because these devices are designed to withstand market occurrences, they are normally fine. As you're probably aware, USD is now worth significantly less than $1, hovering around $0.08917 at the time of this recording. The worst aspect is that individuals buy and engage in USD and other stablecoins to protect themselves from risk and volatility. When you want to be safe, you put your money there. That's meant to be the safe choice, right? Severe inflation, such as inflation that doubles overnight, is the greatest way to illustrate this. So, yesterday, tea cost $3, so it's $6 today, and it might be $12 tomorrow. Every single USD holder, and there are millions of them, experience something similar. This is enormous. So, what started it all? Anchor Protocol, the most popular loan platform in the world, changed their rare structure at the start of the month. You may earn around 20% APY by lending out the USD stablecoin token. Rates are insane. The issue is that this was more of an initial rate to get people into the ecosystem and develop interest. Later, rates would be reduced. They were wasting a lot of money, and this couldn't continue indefinitely, which is acceptable. If money ran out, rates would simply fall. However, there would be no problems with your deposit. A new rate structure was implemented in early May, making rates more flexible depending on demand. Rates were predicted to drop by around 1.5% each month for a few months under that protocol until stability was achieved. Then they weren't wasting as much money. So this began with the idea that those who had money placed on the Anchor Protocol, which was generating interest, would leave. Some would, and the exchange would spend less money. The exact opposite occurred. After that transfer, deposits reached a new high of roughly $18 billion in early May. However, it was not the end of the road. I kept an eye on it, but I wasn't too concerned because, once again, the money was running out. It's fine. However, we are currently in a volatile market. Everything is down, including stocks and cryptos. When it comes to investing, there is a great deal of worry. People on the open market began to sell cryptos, including Luna, the cryptocurrency that underpins USD. Investors were concerned about Luna's capability to back the value of this sudden large USD token due to its price drop. It's one of the top 10 tokens. Now, some investors have started selling their USD, putting a lot of negative pressure on the asset because it is algorithmic and might lose value. This knocked it down from the $1 mark. So it jumped from $1 to roughly $0.99 around May 7. This was not the end of the world, after all. Coins that are stable fluctuate. Even the USDT varies a little. USD was recently trading at a $1.01 price. No one seemed to notice. It was perfectly fine. So matters were a little delicate, but the market as a whole is. So this didn't appear to be a significant problem. That is, until the Fed declared the interest rate hike on Monday. As a result, equities and cryptocurrency fell drastically and nearly rapidly. People who were concerned about more market losses started selling, including the Luna token and UST. As a result, Luna's price continues to fall due to a negative flywheel effect. Remember that Luna is a supporter of UST. As a result, people are becoming increasingly concerned that the value of this stablecoin is eroding. This means there will be even more sales. And you can observe how these sell-offs have a detrimental impact. Because consumers are now panicking out, USD slips further from its $1 peg, selling off more and more. It hit $0.98. I'm done with this, people say. That detrimental effect can be seen in compounding. The market capitalization of USD is now falling dramatically. This is the point at which prices start to plummet. And I'm not gonna lie, it was an extremely stressful period. This happened in front of my eyes. I was on the Luna and USD charts. Luna's live count dropped by half in what seemed like minutes. I watched as the price of USD, which was intended to be $1, fell to $0.80, $0.70, and finally $0.60. I couldn't do anything about my deposits at this time. The network was overcrowded. This thing may hit zero before I could put any money into an exchange, draining my account. Anyone who was employing leverage was almost certainly liquidated by this point. It's not going to be good if you have even 10% leverage, and there are a lot of them. But you know what irritates me the most? Before investing a single dollar in USD, I conducted extensive research to see if the risk-reward ratio was reasonable. I was familiar with tokenomics and significant risk considerations. I'm well-rounded. I also spoke with 3 other crypto loan hedge funds to check their risk analysis to evaluate if this is something I should pursue, as I prefer to do my research before making a purchase. The general consensus appeared to be that USD would be alright as long as Luna didn't drop below 70%, which appeared like a decent margin of error to me. Well, guess what happened? Luna declined 70% and some more. Surprisingly, it didn't fall to zero the first night, but I was still dealing with losses far greater than I'd ever seen. This was cash. I'd be waiting for good deals on the sidelines when the market was going crazy. I was attempting to stay as safe as possible. I don't want to be the person who sells a dollar for $0.50, so I keep my money in. Because that appears absurd. Who would do such a thing? And I'm well aware that the price might easily return to $1. I even opted to do some arbitrage after learning how this price returns to $1. I should be able to buy USD for $0.70 or whatever the current price is, and then sell it to Terra for $1 and a 30% profit, or whatever the difference is. This was a huge issue, because they had a safety mechanism in place that makes arbitrage less profitable the more it is done. As a result, the system experiences a cooling down time. In typical circumstances, this is quite useful. However, for the time being, this means that my $1 tokens will remain significantly less than $1. In the meantime, the backing Luna is taking a plummet, increasing the risk. This risk increases as the price of Luna falls. Furthermore, the cooldown period is moving too slowly. This is the cryptocurrency equivalent of the housing bubble. So the next day arrives, and I'm aware that we're all treading water. We're doomed if the crypto market continues to fall. A complete bank robbery. But if we remain calm, prices will rise to $1 in a matter of days, if not a week. So I keep an eye on the market and sell a small amount at $0.90. However, things appear to be improving. So the intention was to just wait a little longer to see how things progressed. That was a blunder. Late on the 10th, prices continued to plummet, eventually falling to roughly $0.20 for USD. A dollar now equals $0.20. Fortunately, I did not panic sell at that time. However, I do have sales of $0.50 on the dollar. Who would do such a thing? I suppose it's me. By far the most excruciating sales I've ever experienced. So I'm a witness to one of the worst unpredictable and unforeseen catastrophes in crypto history. But now, I'm reflecting about how I feel compelled to be open and honest about it. Like if someone needs to talk about it. Consider the following scenario. Sure, I'd be irritated if I purchased a volatile item and it lost 50%. But I'd tell myself, well, that's the risk you accept when you invest in a volatile asset. However, when you buy anything that is meant to be a safe bet, at least somewhat safe, it isn't completely risk-free. When it drops, you just feel deceived. And I'm sure there are a lot of individuals that feel similarly about this as I do. You are perplexed. You believe you could have accomplished things differently. You believe you should have gone in a different direction. But the more I reflect about it, I don't believe anyone who suffered on USD should feel bad about themselves. This is how a black swan event is defined. This is the crypto equivalent of Lehman Brothers. It wasn't just degenerates that were involved. It's not an APY of 100,000%. Yes, the APY is high. Please don't misunderstand me. It definitely has a degenerate touch to it. But we're talking about hedge funds and retirement money here. There were a lot of brilliant individuals who were going to invest in this, and they got smashed. Every single person who invested, including myself, did not adequately analyze risk. And this is where we went wrong. And those who claim that this represents a 20% and is unfeasible. What are your expectations? You are entirely correct. Lending rates on virtually every crypto platform are also high. Every exchange that pays a flat interest rate of 8% to 12% on stablecoins is giving up money just to get customers in the door. There is no exception. Nobody expected $18 billion to virtually vanish in 2 days. That's exactly what occurred. So, if you think this video has clarified some things for you, please consider liking it and clicking that bell button to be notified of our new videos. Also, you might want to consider subscribing to our channel. It'll really help us out. Back to our video. Now, I'll discuss what the future may bring in this area. But first, I'd like to address the possibility that this is a concerted attack. We don't have evidence yet, but I believe it is critical to comprehend what is being said. As a result, market conditions exacerbated the problem. However, there are speculations that it was prompted by BlackRock and Citadel. They leased 100,000 Bitcoin from Gemini and then swapped 25% of it into USD, according to the story. They then contacted Tierra's founder, Do Kwon, and told him they wanted to purchase a huge chunk of USD and would offer Bitcoin at a discount to do so. They also desired to do it straight, so they didn't cause too much damage to USD. He allegedly took the bait, reducing the amount of USD accessible. This hasn't been confirmed yet. After that, BlackRock and Citadel sold all of their Bitcoin in USD. It led both markets to plummet at the same time, causing fear or at the very least exacerbating existing concern. They purchased back their Bitcoin that they gave out at a lesser price once the price has dropped, making a nice return on the loan. The bad part is that if this is correct, it is perfectly legal. They were merely taking advantage of a significant flaw in the market. It's a pity because the market is in poor shape. You can't speak or do much. This was predicted by others, including myself. We shouldn't be too harsh on ourselves though, because anything can be predicted if you search hard enough. What will happen now? I'd like to highlight two main concerns. Terra is voting to change the USD algorithm to speed up the $1 peg algorithm, allowing the price to return to normal sooner. This is great, but it comes at the sacrifice of Luna. It'll put a lot of downward pressure on the market. Even with this modification, I expect USD to be quite volatile until it is resolved. Even if it can be cured, if you still have USD, the stress is not over. Of course, none of this is financial advice in my perspective. Second, this is disastrous for the entire cryptocurrency market. Regulators have been watching crypto loans and stablecoins closely over the past year or so. I'm ready to guess that this is the final straw for both of them. Consider the bank runs on Black Wednesday during the 2008 financial crisis. All of these statements are true. People have fun, make money, markets heat up, and the music ultimately fades away. After that, regulators must intervene to try to keep it from occurring again. But then a new market emerges and the cycle repeats again. And we were expecting it. We can only learn from this situation now. So I've decided to broaden my horizons even more. It's a terrible happening for crypto, but we must remain united. And with that, this concludes our video. Acquired a lot of knowledge from this? We recommend checking out our other relevant videos from our channel. Also, consider sharing this video to any friends or family members who might find it useful. Until next time!